Hi guys, welcome back to my channel where I share my opinions on investing, personal finance, and entrepreneurship. Today, I'll be going over a few things that I believe every new investor needs to know. Now, if you have not yet subscribed to my channel, go ahead and hit that subscribe button. Also, hit the notification bell so every time I upload a new video, you'll be one of the first to know. Before I forget, hit the thumbs up button. Helps the channel a lot. So when I started investing in late 2017, but before that I've had my investment account for about I think it was 2 years before that. The reason I started investing so late after actually getting my investment account is because I was of the impression that I needed to save up a big chunk of cash and then just dump it all in my investment account and pretty much let the magic just happen. But no, I have found that it doesn't actually work like this. So, first of all, guys, don't be like me. To be honest, what I have learned is that I will never have enough money to invest. There are companies that I see that I want to invest in, but based on how my finances are structured, I will never be able to that because I get paid a fixed amount every month. I also set aside a fixed amount for investing. Now, when I started investing in 2017, at that time, the minimum amount of shares that you could buy was 100. So, once you invest on the stock market, you cannot purchase less than 100 shares. Recently, they actually changed the threshold to just one share. Now, if it is that you want to invest in the stock market, purchasing one share should be pretty easy. If it is that this share costs $10, what you're going to do is you're going to pay $10 plus the charges associated with buying this. So if I want to be very generous and say the charges are $10, so you purchase one stock for $10 plus the charges $10, then we have a cost here of $20 for your very first share. Now, with these $20, you have just started your very first investment. Now, I believe personally that with this one share rule, everybody can invest. I'm sure that every month, if you are able to find, let's say, $100 and you buy 5 shares, after a time, this builds up. It all adds up in the end. So never let the thought that you don't have enough money stop you from investing. The stock markets only want you to buy one share at a time. So if you're buying one share every month, at the end of 12 months, that's 12 shares. So you have 12 shares in, let's say, 12 different companies or however you want to split it down. At the end of the day, guys, what are you waiting for to start investing? The only correct time to invest is now. Now, if you believe that, go ahead and hit that like button. With investing, time wasting doesn't work, to be honest. Now, I remember I was watching a stock. The stock at the time was for $1.50. It was Pulse investment at the time. Now, this is not an endorsement for you to go and buy Pulse stock. This is just my experience that I'm sharing here. Now, with the stock at $1.50, thereabouts, I remember thinking that this at the time was a very good stock to buy. Now, they had a lease renewal. They renewed the lease for Pulse for $1 for 50 years because it was an affiliate company, so they just renewed the lease at the time. So after the lease renewal, what happened is that the price inched up a little bit. I was still of the mindset that it is a good buy, but I was just wasting time, to be honest. Now, after that, they went ahead and did the Airbnb announcement. Now, after the Airbnb announcement, from $1.50 to $3 something. So, right there, price doubled. At this point, I'm like, I'm not going to buy it for $3.50. I don't think I should go in now because I didn't get it at $1.50. So I'm not going to get it for $3 plus. Fast forward a couple months later, they did a bond issue. Now, they're saying that this bond issue is to invest in a new property that they're trying to develop somewhere up in Stony Hill. And they're going to do a lot of apartments and so on. The next thing I know, this stock is trading for over $10. And I'm here looking like, what just happened? Why did I not invest in this stock? So this is where we can say procrastination, not very good on the stock market, especially for stocks that you like. So waiting too long to buy into that pulse stock at the time, I lost my opportunity. Because if I had spent that $1.50 and bought the stocks, I would have made a killing, because when you start at $1.50 and then that stock just explodes to $10, you see how much money you could have made just by purchasing a little piece of that? Now, one of the reasons I believe I missed out on the pulse stock is because the goals for my portfolio were not clearly defined. So just like how you set goals for your career and for every other aspect of your life, you also need to set goals for your portfolio. With the goals set, what this does is to set the tone for your portfolio. It tells you where you want to invest, who to invest in. For me personally, I prefer to invest more in growth stocks. So with a pulse that was poised for growth at $1.50, I would have invested in that stock and reaped the rewards when it soared to over $10. My portfolio that is based mainly on growth is not the only way to set your portfolio. Your portfolio goal could be one where you want to collect regular dividends on your investments. You want regular cash flow. So it all depends on what you want to do. And remember, as with any goal, you can actually change it anytime you want. So as your portfolio matures, you can decide that, hey, I might want to move from a growth centric portfolio to one where I start collecting more dividends, or vice versa. So it all depends on what you want and where you see yourself. Another aspect that you want to take into when you are setting the goals for your portfolio is your risk appetite. Now, your risk appetite is the amount of risk that you want to subject your money to. There are safer investments out there. So you basically have to come to an understanding with yourself that, hey, I'm going to invest my money. This is the level of return that I want. And then based on the returns that you want, you go out and look and see the type of securities that match the returns. When you're looking at your risk appetite, there are three different types of risk appetites to take into consideration. There's one, the risk averse. This person doesn't like to take on risk. Then we go up to risk neutral and risk seeker. So as you can see, risk averse, not much risk. Then when you go to the other end of the spectrum, you find the risk seeker. Now, these persons are the ones that normally want to take on as much risk as possible, because they're trying to make as much from an investment as possible. So they are willing to take the risk. For me, I can see where my very first investment, I was more on the risk averse side. I didn't want to subject my money to losses. But over the years, I can see where I have actually grown from a more risk averse type of investor to someone who is now actually bordering on a risk seeking threshold. So over time, your risk profile will change. It all depends on how you are maturing as an investor. When I started investing, it was at that point that I needed to actually make a particular investment every day for the rest of my life. Now, this investment that I had to make was actually an investment in myself. I had to ensure that every day I try to learn a little bit more about something in investing. Now, the reason for this is because I always like to invest from an informed position. So with investing from an informed position, I need to know what the companies I am investing in are doing, what the industry is doing, even what their country that they're in is doing. Because depending on all of these factors, I may need to not invest in this particular company at this point in time, or no would be the time to shore up my investment here, because we're going to be looking at something where this company will go up in value in the short to medium term. On the flip side, if it is that I was only investing with the market, then I actually leave myself to the whims of the market to do what everyone else is doing. I can tell you, when the market is performing very well, everybody is an expert because there's not much room for you to pick losers. Now, in the past few years, we can see where everybody on our market has been doing very well. So at that point, everybody is a winner. So we have experts. Everybody is thinking, hey, I cannot lose. There's nothing I can do to lose. Now, when we have shocks to the market, this is where we see if people actually know what they're talking about. But if you have a particular level of knowledge, then you can actually look into what you're hearing, see if it actually makes sense, and see how it will affect you as an investor. Now, finally, I believe as a new investor, you should always surround yourself with persons that are like-minded. If it is that you believe in football, I don't see you as a footballer or someone that likes football going every day and sitting with persons that actually like cricket or play cricket. You're going to try and find yourself with footballers because this is where you're going to feel the most comfortable. This is where you're going to get the conversations that you like about football and not cricket. So why would you think investing is different? When you're investing, if you're able to sit and bounce your ideas off like-minded persons, you'll be surprised at what you can learn just by sitting down for 5 minutes and talking to someone who is just as enthusiastic about investing as you. You'll be surprised. The reason I believe that you need to actually listen to persons and engage with persons that are trying to invest is because nothing grows in a vacuum. So always try to share your ideas and be open to the ideas of other persons because we can never know everything by ourselves. So there you have it, guys. Just a couple of things I believe every new investor should know. Now, if you have not yet subscribed, go ahead and hit that subscribe button. Click the bell icon so every time I upload a new video, you'll be one of the first to know. So just remember, I'm just a random guy on YouTube. So before you make any changes to your investing portfolio, be sure to speak with your licensed investment advisor first. All right, bye-bye.